Hi, Jim Romer from bestweatherinc.com, only all-weather newsletter in the world that helps farmers and traders in commodities to learn about trading, conservative ETFs, options, things like that. What are commodities? There are physical commodities like precious metals, silver and gold and copper you can take possession of course. Energy commodities, natural gas, crude oil, gasoline, and the agricultural markets, that is our forte. Grains, corn, and soybeans produced in 4 or 5 countries around the world. Soft commodities like orange juice, cotton, cocoa, and coffee are, of course, affected by weather. And commodities are very highly leveraged versus stocks, which are not. That means a small move in a commodity can make a big difference in your portfolio, possibly major profits or even big losses. So the way to trade them is through ETFs if you're conservative. Commodity ETFs are much more conservative and also less volatile than futures and options. The first exchange really was in 1848 here in the United States, the Chicago Board of Trade. And since then, things have gone pretty much electronically. Actually, you can go back to really the 1700s when the first exchange was actually over in Japan. And that actually created hysteria in the rice market, as well as years later, the tulip market. Well, look at that crash to the right there. Remember the tulip craze back in Holland, back in the 1600s? This was before the first actual exchange. What we like to do at bestweatherinc.com is help you mitigate risk so you don't see a major collapse like you saw in the tulip crash in the 1600s. More in part 2 about commodities.